Hey guys, what's up? It's AB Trades, and I run a YouTube channel to teach people how to day trade options. I've received a lot of questions recently about the best course that one can buy to learn how to day trade options, so I thought I just might as well release a bunch of videos that would teach you exactly what would be taught in a course. So this is day 3 of the 7-day strategy release where I'm showing you strategies that people make you pay money for. So we talked about RSI divergence already, and we talked about MACD divergence, and you can view those by going back on the YouTube channel. And if you want to continue to see what I'm doing, please subscribe and turn on those alerts so you can see when new videos come out. Also, please like and comment so I know that y'all are liking the videos and what else y'all want. Alright, so today we're talking about the triangle pattern. So the triangle pattern is probably one of my favorite setups. It does not occur as much as I would like. But it gives you a very well-defined risk to reward ratio. It shows you where to get in and where to get out, and it also has a bunch of different setups that you can look for. There's a symmetrical triangle, there's an ascending triangle, and there's a descending triangle. So let's look at it. So one thing I did want to point out is that after a stock has run up so much and then it starts to consolidate into a triangle, which I will talk about more in a second. If it runs up way too much too fast and it consolidates into a triangle, the triangle will not break out to the upside because it's already run way too much and it's overextended. You can see the same thing happen on Apple one time, but I just want to show you all that there are caveats to all the strategies I'm showing you. However, in the long run, they all work out and have a good percentage chance of working out if you stick to rules. Alright, so if we look here, we have a triangle setup. A triangle setup is defined as having a previous move, this move previous being to the upside, okay? And then accompanying that move to either the upside or downside, we have price starting to consolidate into a range. So if you can see here, connecting the consolidation points, it almost looks like it's consolidating into a triangle into one point. So that is where you get the triangle name from. So there's ascending, which is where you have it hitting up against a solid resistance point while the lows are getting lower, so it starts to pull up and it gets into this resistance, and so you enter in the point of the triangle and then you let it run to the breakout top, which of course you're watching volume to confirm the breakout and a bunch of other things, but I'll explain that more. And then your second type is where you're pressing up against a support while your lows are getting lower and you're consolidating in between this tight range. You enter here for a put and then you let it run to the downside. And then your second or your third one is what is known as a symmetrical triangle, where it's coming from either down, consolidating, and then moving back down to the downside, or coming up, consolidating in between the price points. The reason why this works so much is because price cannot stay consolidated within a few cents for long. The reason being is we're trading big name blue chip stocks. These stocks cannot trade within a few cents. That's just not how it works, especially with all the volume that's coming through. So if you can see here on SPY, we have a previous run up. So we hit the first requirement that we're having a previous trend. It's moving in a certain direction. The second, we start to consolidate within a triangle. It can be any of those three I just showed you, the ascending, the descending, or a symmetrical triangle. In this instance, it's a symmetrical triangle. The reason why I did not enter on this trade, even though if we go back and you look at it, look how far that ran, I didn't enter because I knew that the Fed chair was speaking. So in addition to stuff, you also have to watch news. And I did not want to trade because the Fed chair, it could have gone straight down. I don't know. So that's why I stayed out. But we also have another symmetrical triangle here where we're having a previous run to the downside, and then we start to consolidate in between here. And when you start to consolidate, you want to see the volume start to decrease because people aren't trading in between a tight range. But when volume starts to pick up, then you know that the breakout is confirmed to the downside. This is not the best trade setup in the world, but again, it's one, and we can go back through. The amazing thing about this triangle setup is, as I will show you, you can predict how far it will run and how much money you can make from it. So for instance, you can trade it on a 15-minute time frame, a 1-day time frame, and you can trade it on any stock. So like the RSI and MACD divergence primarily work on SPY only, but triangle patterns work on every single stock. And that's if you join, or if you want to look and connect with me on the Discord group that I have linked in the description. We mainly only trade triangle patterns because of how great they are. So for instance here, we are running up, we start to consolidate in price within here. Volume starts to slow down, and as we get into this corner, volume starts to pick up, we break down to the downside and we run. So that will run to the downside. But there's so many other examples that we can show you. Like here is another one. We run to the upside, we start to consolidate here, and then we break straight down to the downside. How do we anticipate the runs? From the bottom to the top, this length. So the length of this run here, which is, let's say this is about 1367. So it's about a dollar move, right? So from the bottom to the top of the triangle is what you would expect on the breakout. So if this is 266, then we should expect around 265 highs, right? So we should expect around here. Again, we didn't get that whole move, but still, it gives you something to expect. The reason why I also love these is because your risk to reward is also set up all in your favor. Let's see if I can find another good setup. If not, I know a great setup on Apple. So for example, here's one just on a shorter time frame. Why? Because we have this previous run to the downside. We form a bottom here, there's a green, we form a bottom here, we start to bounce, and then we fall through this support while forming lower lows. You may not call this the best triangle, but hey, it works. The volume is starting to consolidate, and then right here on the breakout, volume shoots up, right? And then we have a nice run to the downside. A lot of the times, a triangle pattern will break through, it will come back up and retest its previous support before running again, and that you can see what happened here. Now let's go to Apple, because I have a great setup here that was amazing on, I forget, I guess it was Friday. So if you can see here, but this is the example of a descending triangle pattern where we're having it bounce up against us support, but the lows are getting lower. So if you can see here, we are meeting the requirement that's coming from a previous trend. 2, we're starting to consolidate in between into a triangle, and 3, we break out to the upside with increased volume because the volume starts to pick up more and more. So what is so great about this triangle setup, and why do I like to trade it? One, it's very recognizable. You can see it, and you have you can see it. It's a triangle. It's consolidating in price. Also, if you're going to enter, because when you have it, a triangle is more times than not a continuation pattern. So if we're trading to the downside and we consolidate, we're most likely more times than not going to see a continuation to the downside, right? So if you enter here in the middle of the triangle on a put, where is my risk? My risk is up to hitting this line again. So my risk is this, and then my reward is down here. So imagine this reward. All this reward for this risk. That is why I like triangle setups. My risk is defined. I know that if I'm wrong and it starts to reverse, where I am getting out at. But I know that also I have a lot more reward in my favor. All right? So this is a prime example of a triangle setup on Apple. Again, it works in almost everything. It does not show up all the time, but it does show up a lot. I know there's someone in the group chat, I believe it's Dr. C, who trades primarily MU triangles all the time, and it looks like my internet does not want to work with me. But I hope y'all understand the concept that we have an ascending triangle, and we have a descending triangle, and we have an asymmetrical triangle. The reason why it works so well is because price on a stock, let's see if I can move and maybe show, bummer. The reason why it works so well is because price cannot consolidate for too long. We're trading big name blue chip stocks that are priced in the $100, $200, $300, or Amazon in the thousands, or 1,000, but you know what I mean. And a price cannot fluctuate in between 20 cents. So obviously volume, when it comes in, will cause it to break out in a direction. So when you're looking and you're seeing a trending day, either trending to the upside or trending to the downside, you see it start to consolidate within a triangle or even a rectangle, you know that it cannot stay that way forever. Triangle patterns are my favorite, and if I did not explain it to the extent that you want, just go on my YouTube channel and search for triangle patterns. I have made multiple videos about it. Again, guys, thank you for tuning in. Please like, please comment, and please subscribe, because I want y'all to enjoy this content and I want to know what y'all like about it. Again, this was day 3, so see y'all tomorrow for day 4.